Today is Wednesday, February 24th, 2021, and I'm your host, Max Gottlich, and I talk about my interpretations and insights into financial markets and the global macroeconomy. GameStop is squeezing for yet a second time today, going from about $40 to $200 in overnight trading tonight. And I really truly wonder what the hedge funds are doing now, the ones that reshorted GME, because they are simply screwed. And by the way, I have no sympathy for these hedge funds whatsoever. And why would I? The past couple of days, in fact, we've seen massive intraday red to green moves across the major indexes, obviously, most notably the NASDAQ, with the long bond continuing to just tumble on down further, along with rising yields across the curve. We recently saw the real yields on the 30-year just surge to positive territory, really just back to pre-pandemic levels. You got the 10-year approaching to the big 1.50. Copper prices reaching all-time highs or almost all-time highs, and oil prices surging due to the obvious production cuts, as well as lumber reaching all-time highs, pretty much due to the saturation in like residential home building because of really record low mortgage rates. I mean, that's the root cause. Not to mention, of course, the fact that we're seeing relatively high, actually very high inflation expectations, alongside with the highest break evens we've seen, frankly, in a decade, with record net shorts on the dollar and bonds. All this, and yet the Fed still doesn't see inflation. And to put it in their laden terms, they're not even thinking about it. That is inflation or raising interest rates. Now, for the rest of the show, I really want to talk about the Eurodollar system and the fact that it's so misinterpreted and entirely misunderstood. And, we've talked about it before on the show, but only briefly. First of all, a Eurodollar in itself is an unsecured dollar deposit outside the US, right? It's literally a fractional reserve banking system in the form of a world funding market, right? It's a funding market, it's a dealer's market, and the Eurodollar system was pretty much established post World War II, right? Post 1945, when the US literally just obligated themselves to fund other parts of the world and to increase foreign imports. So to give you an idea as to how big the Eurodollar system actually is, then you'll be glad to know that, and I got right here in front of me, the BIS data as of the end of 2018. If you add up, there's a whole list of things that they added up here to get this total nominal amount, but some things like on balance sheet US dollar liabilities held by non-US banks. You add up extended guarantees, derivatives, their claims. You add up global goods imports, just a bunch of other stuff as well, and you'll get a number of more or less $60 trillion, which is, that's many times over of what this entire US economy is worth. It's crazy. Really keep in mind the obvious, that the actual term Eurodollar, right? It doesn't have anything to do with euros. The term Eurodollar actually refers to US dollar denominated deposits outside the US, right? I said that before, at foreign banks or institutions, which means Eurodollars are not regulated by the Fed. They're not regulated by Regulation Q, like interest rate ceilings or anything like that, which is a major reason nobody knows much of anything at all about the Eurodollar system, because there's literally no data out there on it. Nobody's tracking. I mean, the closest thing we can do to track dollars circulating globally is to look at, central bank, Forex reserves. But in essence, what I'm trying to get at here is, that this is all based on the fact that the US dollar is the world's reserve currency. And that means the dollar is the core of the global economy. So, if you want to borrow money, uh, basically this means the goal for the US has been to keep increasing the current account deficit and the capital account deficit because they need dollars outflowed overseas, to sustain the world's reserve currency status. So, the Eurodollar system can actually increase credit by a multiple of its reserves. And it's limited to the kind of precautionary reserves that these banks, these Euro banks hold so they could actually meet their short-term liquidity needs. So that's why I said earlier, they're not necessarily at all regulated by the Federal Reserve or anything in terms of Regulation Q or any kind of reserve caps. They're just limited to the precautionary reserves. Um, you know, they hold in order to meet these kind of short-term liquidity needs. So this is all I wanted to talk about for today. And I hope you enjoyed, and please hit the link, not the link, the like button, and comment. And please note, I'm not a financial advisor, and everything I say is entirely for informational and educational purposes only. Okay, thank you, everyone.